Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the June 12th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. What we do here is break down the latest from the NDPSR report. And since it feels like summer outside, approaching 90 degrees, we'll try and get through this as quickly as possible, starting with butter. This week's butter number came in at 307.13. That represents a plus 5 to the CME 1-week average of 302.44. So a little bit of a flip in basis week to week seems to be the theme on this report. Plus 5, certainly better than what we were able to achieve last week where we held negative basis. And of course, plus 5 is well above our expected 2-cent positive basis. Now that 302.44 is a low week. We were a little bit above the 310 area, broke down to that 302 area, and then back up towards the 310 area. So the CME was down 9 to get to 302.44, and the NDPSR only able to move a little bit more than a penny. So that accounts for the big shift in basis. What's interesting, at that positive number, that 307.13, the manufacturer was able to move almost 4 million pounds. So well above our 3.5 expected weekly volume. Not a lot of assistance coming from the CME with only 5 loads trading on the CME last week. So these were all contract sales that basically took the NDPSR up to this plus 5 level. Up next is cheese. We'll start with the blocks, 191.76. That represents a plus 4.5 to the CME 1-week average of 187. So plus 4.5, that is kind of in line with our expected basis, but certainly a stark contrast to last week where the block came in negative to the CME weekly average. Here, the block's down a little bit, but basis recovers to 4.5 over that CME 1-week average of 187. That higher than expected basis or higher than last week's basis came at a cost. This is call it 5 weeks in a row that block volume has really been suffering. I mean, you have to go back a long way to get to our expected block volume of 12 million pounds. So the fact that we were able to put 10.7, almost 700,000 pounds over a week ago, certainly a step in the right direction, positive basis, maybe even more so a step in the right direction. But all in all, it looks like the scorecard in the blocks is expected price on lower than expected volume. In the barrels, 205.69. Now, this is a nice number because 205.69 is a plus 6 to the CME 2-week average of 199.52.5. And that plus 6 is at the high end of our expected 4 to 6 cent positive basis. We traded 13 loads at the CME last week at, call it, the 195-ish neighborhood. So the fact that the NDPSR was able to print a price north of 205, certainly impressive with the weight that we traded on the CME last week at 195 minus freight. But even with that weight that we traded at the CME, volume still suffering. So similar to blocks, we have a really nice price out of the manufacturer. However, volume lower than expected. Here at 12.2 million pounds, falling well short of our expected 13.5 million pound level. And again, if you look back at the 5-week block volume, we have not achieved that 13.5 million pound level once. So either the manufacturer shifted to a different variety of cheese and isn't making blocks and barrels, or the demand for those products is just limited and end users are taking the low end of their contracted allotment. We'll see what they have in store for us in the cheese market in the weeks to come. And then in the whey, 41.06. That represents a plus 1 to the CME 1-week average at 40.10. We traded 11 loads at the CME last week at what you would consider to be an elevated level. Volume here on the NDPSR, good. We're back up to that 6.5 million pound mark. So what is the new normal for volume? We achieved in whey this week. That 41.06, as I said, is a plus 1 to the CME weekly average. And if you look back at the May 25th price, the manufacturer was able to call a premium on prior week's NDPSR of 40.60. So about 40 cents over prior week's NDPSR. The manufacturer calling a little bit of a premium and good volume. All in all, I'd have to call it a win for the manufacturer in whey. And then lastly, non-fat, 116.64. That represents a -1 to the CME 1-week average of 117.40. So the only product that has a negative basis on this week's NDPSR report is the non-fats. That could partially be related to the fact that we traded 31 loads at the CME. So big volume on the CME. Those trades, if it was from the manufacturer and you had a big freight allowance, that would go a long way in pulling the weighted average price down. But once again, negative basis in non-fat, but the manufacturer is able to clear a lot of products. So just a little bit short of 20.5 million pounds. I think all in all, you'd have to call that a win as the manufacturer continues to stay price sensitive in order to move big volumes as reported here on the NDPSR report. So this is week 1 of 4 for the 4-week June pricing cycle. Currently getting a June class 3 of 1984 and June class 4 of 21 even. Still a little bit of math at the CME until we can come up with a final estimate. But right now, futures look to be pricing the market rather accurately. We'll see what they have in store for us in the weeks to come. On behalf of Paige and the entire EverAg Insights team, I'm Joe. Thanks so much. See you next week. Bye.